When there's a bargain, there's always a reason for it. That's it. There's no bargains in this market.
What advice would you give me? What maybe the top 3 or 4 things you could tell me? Look, just be mindful of this when you're having a look at a property.
I mean, number one, I think being prepared. That's the big important part.
When we're buying a second-hand car, we'll often get somebody to inspect it to go, hey, is this okay? Is it going to break down on me? Am I getting value for money? Or is somebody pulling my leg? Why is it when we go and buy property for $500,000, $1 million that we don't? We might get a building inspection, but, wouldn't it be great if you find somebody who can add the value of, yeah, actually, this is really good value and let me tell you why. Or this is not great value and maybe we shouldn't pay that much. Or I found a better property that'll suit exactly what you want. Wouldn't that be great? Meet Peter Gavalas. That's actually what he does. He's a buyer's agent. What I've found myself in the world of buyer's agents is there are a bunch of them that are great, and there's a whole bunch of them that I've found they're just transaction people. Real estate agents who decide, let's play the other side of the coin. Join me, have a listen to why Peter does what he does, how he does it, and you decide how it's different and whether it can add value. I think it's wonderful. So how did you get into engineering? You've been working with your dad since you were a kid, basically. And what led you to the engineering pathway?
Yeah, I started being, from a young kid I wanted to be an accountant. And
Why?
I don't know. It's some reason I wanted to do. It's just, I don't know, it's like the numbers, it sounded like a good idea, sounded like a good job, but so I wanted to do accounting. I just continued on with that, I guess, and then started studying accounting for about 1.5 years, 2 years, and I was like, you know what, this is not for me. It got a bit boring, digging into the numbers and looking at sort of, stock loss and things, and I thought, no, this is not for me. So then I thought, what to do next. My brother-in-law was engineering, and he said, look, come along and look at this, and went experience with him for a little bit, so it was pretty cool. So it was pretty much working on the ground, doing land development. So again, involved in land and property.
Yeah, okay.
So same sort of aspect, and it was pretty cool, and carried on from there. Went and studied,
What happened next?
So obviously went and did that for 25 years, I guess. Yeah, 25 years.
Well, that's a long pathway.
Yeah. So did a lot of stuff there in land development. Late 2008, 9, I went into the mining industry. That was really good. Different projects, whole new sort of way of looking at things, delivery, cost, schedule, all that stuff. That actually taught me a lot in what I use now, the skills I use now, because very important, I think, on cost, delivery, schedule, all those things that help you in the current job as well. So it's a different way of looking at things as well, because they run very lean, mining companies. So
they do.
Every dollar counts. If you can identify ways of creating better value or try and save some money, things like that, it's always good. So So, and then we delivered a project for one of the big mining companies, which is great. So from identifying the site to building all the infrastructure, including an airport, which is pretty cool, which I'd never done before, and. After I've done that, I thought, you know what, I've pretty much done everything now. I've gone to the pinnacle and, and looking for a change, some change in direction in career.
Is that when you started?
Yeah, I was tossing up being, obviously Dad was a builder, developer. I was tossing up doing being a builder myself. But I figured you probably need a lot of capital for that as well, and a bit risky. And I'm glad I didn't, because I probably would have gone bust by now. given what's happened to all the builders that have been around, established builders, they struggled, right? So how would a new person go on it? So I certainly changed direction, and sort of come across this, and it wasn't too popular in Perth, but more so on the East Coast, I guess. And I figured, it's probably something that suits me. It's more an advisory role. I don't sell anything, so I'm not a salesperson. So I'm here to advise the client and help them and make a good decision, I guess. Yeah, and which I think it's worked out, because they do trust me, and they'll whatever I tell them, they'll listen to me. So which is what you want.
Yeah, it is. Tell me how you do what you do, because it is markedly different from the real estate agent model. And I've seen clients and had clients that have used you with wonderful outcomes. And we had one recently actually used one of your people, and she's over the moon. In a tight market.
Absolutely.
Too. So she found a great property at good value in a market where there were no properties.
Yeah.
Which is extraordinary.
Yeah. Yeah, I mean, at the moment we're finding off-market properties and taking our clients through them. And I mean, like I said, I don't want to be salesy, I don't want to be pushy, but in my head I'm thinking, you have no idea what you are looking at here on your own, no one else to compete with. If this was a home open, I know there'd be 50, 60 people here.
Yeah.
And sometimes they don't realise how good an opportunity they've actually got. And to be able to put an offer, negotiate with a seller one-on-one, it's just unreal in this market, you know. So, and fast forward to home opens, and like you're seeing 50 people, 60 people, 70 people, and it's crazy. So, you know.
Yeah, the price just escalates,
yeah,
and
absolutely.
people actually don't seem to dig into the makeup of that property.
No, exactly.
The focus is elsewhere, isn't it?
That's right.
The red flag over
I want to
here.
win.
Yeah.
I want this property. I don't care where it is. I don't care what it costs. I want to buy it. You
Yep.
know? So that's the mentality at the moment. Yeah.
Can you share, if you're happy to, how you look for value? What does that actually look like? Because you're an engineer and you've got development and building experience, so your eyes are going to be way different.
Yeah. I think, I mean, you know, in this market, you're not getting any bargains. If someone's looking for a bargain, it's not going to happen.
Yep.
There is a shortage of properties, I guess, and lots of people looking to buy. I mean, at the moment, there's probably 3,200 properties on the market, and there's probably about 20,000 people looking to buy. So it's about finding, you know, reasonable market value without paying too much. The big challenge, I think, is like if you find a good property in a decent location, I think prepared to pay a little bit more for it. But it's just buying something in a compromised location, which I call like a B or C or D grade property.
Yep.
That's the challenge when you're sort of buying that and paying too much for that. So I've seen properties go through different cycles in the market, and properties have sat on the market for a long time and not sold previously, and now get snapped up in the first week.
Yeah.
And I think, poor bugger, you've just paid a lot of money for an average product, right? So I think that's the big value at the moment, is buying the right property and in the right location. If you get A or a B grade property, I think it's a win.
So talk to me more, if you're happy to, about breaking down what all that means. What is an A grade? What is a B grade? What's a C grade?
Sure,
what sort of things do you consider?
Yeah, so I mean, first of all, obviously, we don't want a busy road. We don't want high voltage power lines. We don't want to be on a roundabout. We don't want to be near a freeway or a train line, those kind of things. Slope on the block's probably important. Where it's kind of things where people in a different market, in a market there's more supply on the market, think, okay, I've got a list of 10 things I'm looking for, and I've got 20 properties to choose from, right? So I want to tick as many of those boxes as I can. So in a market where it's oversupplied, you can afford to do that, right? In a market where it's undersupplied, you kind of tend to tick less boxes. You don't worry about the boxes. You just think, it's a property, it's a roof, I'll move in, I'll buy it, you know? So I think it's about keeping that in mind, that down the track, you will need to sell at some point. Everyone does. Circumstances change. You want to have a sellable product in a good area as well. So I think they're the kind of things we look for. And the floor plan as well. Floor plan is very important. The flow of the floor plan, how the house flows. So walk in the front door, living areas, open plan, kitchen, dining, family, very important. Does that flow out to the backyard? You got a decent amount of grass, a patio or room for one, or al fresco, I guess. That's very important. And room size is the other thing as well that's important. People compromise at the moment or compromise on room sizes. So those sort of narrow, in the 80s and 90s, we did these little small rooms and try to go cheaper, obviously during recession times. So they're the kind of things you struggle to sell in a sort of bad market, I guess, yeah.
What difference in price does the flow make? Because that's such an interesting thing.
It is.
And I've seen people ignore it.
Yeah.
And I've seen a lot of people unaware of it.
Yeah.
And they'll just buy property, and then later the value isn't, well, the value of the property is not as great as what something comparable seems to be, and they can't work out. But the house down the road sold for 100,000 more, and it's the same, and the block size is the same.
Yeah.
Is flow part of it?
100%. It can be flow, it can be natural light, the way it's facing. You know, a lot of people say, look, you know, it's too dark. That property that sold maybe less, or, you know, or the property that sold for more might be a bit more open plan, more natural light, just facing the right direction. So just little things, you know, it's about the feel. When you walk in, it's just the feel you get for the property. People feel like this is a great property. It looks good, it feels good. Maybe it's been freshly painted. All those kind of things help. Like I see properties which are dark, which got no natural light to start with, and then they've got dark walls. And I go, my God, what are you doing? Who's your agent here? Like, seriously, go in and paint it white. Like, brighten it up a little bit. It's, you know, a dark house with not much natural light and dark walls, it's a recipe for disaster.
Well, it's like a podcast studio, isn't it?
People don't want to live in caves, right? They want something a bit light and bright. So try and maximise that where you can. Yeah.
So it sounds to me as if it's not just having a buyer's agent for the sake of, one, locating a property, or two, buying at better value. There's an advisory piece in there as well, isn't there?
Yeah, absolutely. Yeah. Absolutely. I think that's a big thing. Is finding the properties at the moment is the big challenge. Finding the property, getting the opportunity, I guess, is the massive challenge. If we can get it, it's great. But then it's about understanding. Here's the property. Here's the location. Here's the street. Here's the floor plan, the size, the quality, and try and put a value on that, and to make a good comparison to other sales, which is important as well. Yeah.
Yeah, and you do that exercise.
Absolutely.
You run it.
And look, we don't look at sales that settled, 2 or 3 months ago. We look at what happened last week or the week before, and we understand what we're up against in the market. Because, a property sold for X dollars, and I'll speak to the agent, said, 4 offers, 5 offers, they might have been ranging in this sort of value. And it's good information to have, because sometimes it's an outlier. It happens quite a lot at the moment. I'm seeing people paying 5 to 10% over to buy property, just to secure something because they're desperate. And I feel sorry for them because they've got, they're in a corner. They have to buy. And it's good to understand that, because then, that's not the market value. It's the fact that someone's paid too much.
Yeah.
And when you have the next property, you're not up against that level. You're up against 50, 100 grand less, or depending on where the property is and the value of it, 5 or 10% less. So it's about understanding you don't need to be at that level to be able to purchase the property as well.
Yeah. The more you speak, it makes more and more sense to use someone like you.
Absolutely, yeah. And understanding that it's very, very important.
Yeah.
So, yeah.
Yeah. The upfront cost is minimal compared to what the gain will be if you make better quality decisions.
Absolutely. And it's a massive investment. Like, I wouldn't buy a car without getting someone to look at it, right? I bought a car from East Coast before because there's more availability, and I had someone go inspect it for me, check it all out for me, give me a report, go, yep, it's all good, That's a $20,000 car. Like, let alone buying a house. Like, it's you need someone in your corner. Are you making the right decision? Are you paying the right price? Is it a good location? Have you considered everything? It's due diligence. Have you done your due diligence on this property? Like, what's anything that's going to affect me down the track?
I've seen some horrible things. One of my clients bought a property and it seemed to be a really great price. So they bought it, and 2 months after they purchased it, they found out that underneath the backyard, the guy had buried all the refuse from his old business and used it as a dumping ground. And he buried it.
Oh, gosh. Interesting.
Yeah. Expensive.
Yeah, expensive.
Some of it was asbestos.
Oh, gosh, yeah.
So that he'd actually dumped a whole lot of asbestos and general refuse in there.
Yeah, wow.
And they were going to install a pool. So instead of saying, we'll just excavate it, this will be fine, it became a massive mission.
Yeah, gosh.
And huge cost too. Cost them massive amounts of money.
Yeah.
But they had no idea. And it's not as if there weren't signs that there was something buried there.
Yeah.
They just thought, it's a bargain, we'll take it. Yeah. And they didn't look.
Yeah. When there's a bargain, there's always a reason for it. That's it, there's no bargains in this market. So, you need to understand why, if it's a bargain.
So can you share with me a couple of stories? I know you've got many.
Yeah.
Maybe something really great where you found something really good and there was good value.
Yeah.
And maybe something you've seen that, this is really bad, we shouldn't do this. Just to give people an idea of a contrast.
Yeah. And like I said, I think buying, in the current market, buying a property that's, you're not going to get a bargain, you have to pay market value. Now, what is market value? It's what people are prepared to pay for that property at the time. So I think identifying that, and it's, you can look at it, isn't it a suburb? I don't want to be the most expensive property in that suburb, right? So you don't want to set new records for that suburb. Yeah. So you want to be in a suburb where there is other evidence of people buying properties at that value, number one, right? So if you're buying, let's pick a Armidale, you're buying $1.5 million property in Armidale, you think, well, am I doing the right thing here, right? That's a bit of an extreme, but so you want to have other properties in your area that have the same kind of value, if not more. So there is demand for that product, right? Yeah. So I think, and ones where I've kind of walked away from, I felt this is too much, and I've advised my clients the same thing. At the moment, agents are struggling for listings, and to try and get a listing, they're promising high prices to the seller.
Yeah, okay.
Right? So they've got 3, 4, 5 appraisals, and they go, you know what, I need this business, I need to get this product. I'm going to tell you it's worth more. Right?
So what actually happens?
What happens?
In that, yeah, because the seller will be not very happy if a buyer doesn't come along and give them the 800, 900,000 that the real estate agent promised.
Yeah. And like I said, what happens is they promise them a higher price, right, to get the listing sometimes. They're like, okay, I reckon I can get you, $1 million instead of everyone else is appraised at 800,000 or 850. I reckon I can get you $1 million, right? And, if it doesn't come off, then no one goes to the property. There's not many people at the home open. Then all of a sudden they're going, okay, maybe we've priced it too high. So then they call it conditioning. They're conditioning the sellers, right? But it's a cheeky way of getting in and getting the listing, promising them a high price, and they're not delivering, I guess. So you don't want to be the first buyer that comes along and go, oh, this is a good one, pay $1 million for it, and not knowing it's overpriced. So it's challenging. And I've been through properties like that, and I said, you know what, this is overpriced by a fair bit, maybe 100 grand, 150 grand. The quality's not there. It's a cheap build, or the finishes aren't great. And these are things you need to take into consideration, right? So, take my advice and we see it on the market for weeks or months and not sell, and then eventually they'll drop the price. So you don't want to be that buyer who walks in and buys an overpriced property.
Yep.
Yeah. You need to have confidence in this market. The price is right.
Talk to me about a win. I mean, and it doesn't have to be in this market today. It could have been a previous win. Something that stands out in your head that you did for a client, and maybe actually did even better than you thought.
Wins are a bit harder to come by. I mean, I think at the moment a win is buying a property and securing it.
But give me an example from the past. I know you've done heaps of these.
Try a really good one. I mean, I've bought like some most recent one I could think of. Bought a sort of a development potential block for a client, kind of investor looking to do some development on there. The out of area agent didn't know what was sort of happening in that market, which is good, because the ones that are selling in that market week in, week out, they know what's happening, and things until transactions settle, which could be 2 months. Obviously the information is not in the market at the moment. 2 months is a big time in this space. So having someone out of area not understanding what the current market value is of something or what's happening in that suburb is a win. And we managed to find this with an out-of-area agent. Didn't understand what was happening in that market at the time, and we managed to secure it probably, $750,000 property, probably 50, 100 grand cheaper than what it's probably actually worth. Yeah,
Great.
So instant equity.
I actually didn't know that you look for those sorts of properties as well. In my head, for some reason, I just thought you looked for houses, but you actually do look for blocks that have development potential.
Absolutely, yeah. We work with owner occupiers, which is a huge part of our business, and people come to me looking for their homes, whether it's an upsizer, downsizer, or something, first home. And then we got investors, which has been a huge part of the business as well. So a lot of people looking to buy investment properties, and then some people developing as well. Yeah.
Oh, we've got clients for you. more than I thought. I didn't know.
Which is difficult at the moment to find, a good development property or development site that stacks up.
Yep.
Land costs are really high, building costs are really high, so you need to find a good, good location that you can get that upside, I guess.
Yeah, it's probably a bit we can do together on that.
Yeah. But even on the owner occupier side, I'm thinking of the last 6-12 months. Just like again, buying a property, a family home off market, or buying it before it hits the market, securing it before the first home open, which we've done lots of times. That's a real win as well, because you don't understand the value of that until afterwards, and you think, okay, I know in my head what's happening here, and I've seen other properties on that market, and I think to be able to negotiate with someone one-on-one. You're not competing with 5, 6, 7 other offers, and within that you might get some crazy offers as well, and cash and all those things, right?
Yep.
And at least here you've got all the variables in front of you. You know what you're dealing with, and it's one-on-one. You got the opportunity to negotiate on a property as well, but not lowballing. You got to be
reasonable, right? Especially in this market, as you keep.
Otherwise, they won't take you seriously either. So you've got to be reasonable as well. Yeah.
So what? There's more than just you in your company now. How many people in your business?
8 people all up, 8 people up. Three of us are buyers agents, and then one sort of starting up, pretty soon.
So give me an idea of the range of property prices you service, if I could put it that way.
Yeah. So owner-occupiers would be, anywhere from, I guess, what's the lowest? Probably 700,000, 800,000. It's probably the lowest, and then right through to say 10 million. Owner-occupier space. Then investors, look, they vary. We kind of split them up between the business. I think different people have got different strengths and relationships with certain people and parts of Perth. So I generally focus on, probably 800,000 and above.
Yep.
Generally. Yeah. So. Again, because that's kind of more my space where I deal with. I don't sort of focus on the cheaper ones where other people do. So, it's best to sort of put you with the right person, And, investors could be 800 grand through to maybe, 1.5, 2 million sometimes as well.
Yeah, absolutely.
Yeah.
Do you do any commercial property?
Yeah, we do that as well. Yeah.
Okay.
Yeah.
Here we go. We're opening it all up, Peter. Who knew?
Yeah, it's tough space. It's tough. Not much product on the market. Owner occupiers in the commercial space are really, really, just trying to find properties. So it's really tight.
Yes, it is.
So and they're paying a lot of money to get into it. So it's pretty hard to navigate that because they're pretty desperate. They need more space. They're taking on people with existing leases and think, okay, I'm going to move in this property in 12, 18 months.
Yep.
And they're paying a lot of money for it as well. So trying to find value in the commercial space, depending on what it is, that's more that kind of factory warehouse sort of space, the industrial. Probably retail, again, a little bit easier depending on what you want. Office space is probably plenty around. But retail, again, depending on location, might be a little bit easier. But again, people are wanting top dollar for that as well. So navigating value in there is challenging.
It's a hard market, isn't it?
It is all round, yeah. I mean, you're probably seeing people in the commercial space struggling to find properties, trying to upgrade and increase their space, and there's not much around.
Yeah. And even when they do find something overpriced, it's not necessarily suitable.
Yeah, exactly.
It's just super tough.
Yeah.
I think it's tougher than the resi market.
It is actually, and you've also got a lot more East Coast sort of investors, buyers agents coming in as well. And they're just paying, top dollar for things. And they're able to take a hit on the yield because for them, 4.5%, 5% is good. For us, we want 6% yields, right? Based on what they're getting over in the East Coast, it's 4.5% is good. They'll take that.
Yep.
Or 5% then, which is crazy, yeah.
So if I'm a first home buyer and I can't afford to use you guys, what advice would you give me? What maybe the top 3 or 4 things you could tell me? Look, just be mindful of this when you're having a look at a property.
Yeah. Number one, being prepared. That's the big important part. Being prepared to buy property and being prepared to put an offer in. So what does that look like? Obviously, get your finance pre-approval. Don't do the online calculators on the bank and go, I'm good for $5 million because that's not real. Get a proper pre-approval. So speak to a mortgage broker or speak to your bank person. Get a proper pre-approval in writing. That's number one. Right. Then once you've got that in place, you're ready to start looking at properties, and obviously you've got looking for properties in your budget. I guess important part. I think as a first home buyer, you don't want to be in a huge apartment complex. In my opinion, you want something that's got a little bit of scarcity. So there's new developments. 50, 60, 70 apartments in a complex. They look exciting and trendy, and a gym and a pool, but then you've got probably a lot of competition when they're selling as well. So you want to be in a good area. I'd probably recommend somewhere in a city and look for something older. Now, first-time buyers might be an apartment, might be a villa, it might be an old house. Even like those old villas, 2x1s, 3x1s, and there's a million of them around, in a city within 10 k's of the city, right? And it's old, it's 70s, it's 80s, it's old, looks a bit, got the Laminex sort of bench tops and things. But, the thing is with those things, they're so easy and cheap to renovate. You can go as cheap as go to Bunnings or IKEA, buy a new kitchen, and if you can't do it yourself, hands-on, they do it for you as well. There's a service that you pay them, they install it for you, right? Yeah, absolutely. So you can go as cheap as that, or you can go a bit higher end as well. And the good thing with those, as long as it's livable, I think you can sort of add value to that property later on. Now, a single story 3x2, for instance, villa in an inner city suburb, you buy that original and renovate it, I guarantee you in 3, 4, 5 years' time when you're ready to move up, I guarantee there'll be a downsizer wanting to buy that, right? Because downsizers, being the big 4x2 family home, someone double story, they want that single level renovated 3x2 or 2x2 or, So there's always going to be the market for that, and they're prepared to pay a lot more for it too.
So you can really add great value. Even though for a first home buyer, you can get in.
Absolutely, yeah.
Yeah, I remind first home buyers that don't necessarily, it is tough.
It is.
I grant
yeah.
that, but maybe not as tough as you think.
Yeah.
And it's not always good just listening to what you hear,
Yeah.
because this sort of advice is great. You can actually get in.
Yeah.
But don't target something shiny and new,
Exactly.
or a 4x2 because it's your first house.
Yeah, yeah.
Get something where you can add value and actually benefit in 5 years.
Yeah, that's right. I mean, if you buy in the right location, you'll probably make more in capital gain and then use that equity to sort of buy something in a better suburb that you want to live in, right? So I think it's important to identify an up-and-coming suburb. I mean, there's a lot of attraction to living 50 k's out of the city and buying a brand new house. But again, you've got to think of how much supply is in that market, right? Lots of land, lots of new builds, lots of investors in those areas.
Yep.
And, 5 years down the track, is going to be more or less probably on the market, and I guarantee there'll be more. So, again, you're competing against these other people. So buying somewhere with a bit of scarcity, I think is better off. And look around and say, look, I'm buying this product. Yeah, it needs some work. It's only me and my partner, wherever that is. Can we live in it? Do we need a 4-bedroom? No. 3-bedroom, 2-bedroom is probably plenty, right? It suits our purposes. Let's try and add some value here and make some money. And look around. You don't want to be, again, you want to see there are product that sells for more money as well. So you can make some money and add some value to that property.
Fantastic. Where do people find you? How does anybody who's listening to the podcast find you?
Yeah, so I think, a lot of people Google me. We come up pretty highly on Google reviews. Website, resolvepropertysolutions.com.au. Otherwise, just a search under my name, I think. Probably find me lots of avenues as well. So, yeah.
We'll put that. Jeremy, you'll put that in the bottom of the YouTube. Jeremy, the producer over there. Thanks for your time, Peter.
No, excellent.
And that was great advice for people getting into the market as well. And I didn't know you did all that as well.
There you go.
Even better.